or not. And a lot of times they'll say I'm upside down.
Right.
That's another term for a short sale. And now, is a house that is pre-foreclosure, is that a material fact?
Pre-foreclosure? I don't think so.
Okay. So, for example, I had a seller tell me that her house was going to go into foreclosure, but no, the bank had not gone to the courthouse steps and tried to auction it off. So she even communicated with her lender to tell them that she was going to try to sell it, and they gave her so many days before it would become a foreclosure. And it wasn't a short sale either, even though she was very close, because it was in Northgate Park, which is an area where little houses sell very quickly. And so it was even though it was not in good condition, it still was worth more than what she owed the bank. And so we did list it and we did sell it. But I didn't have to disclose that it was pending foreclosure.
Right.
Because for one thing, that involves personal information about people's financial situation, and they don't want that spread everywhere.
Of course not.
So,
But also a short sale may not necessarily be a foreclosure, because you could be keeping up with your mortgage
that's,
payments.
yes,
You just, the house, the neighborhood, for whatever reason, the value has gone down.
exactly, yeah.
You could have bought it at that peak.
Yeah, and you see that, and there are certain neighborhoods where you can go in, and a builder came in and built the house and sold them. You know, the people originally bought them like $169, $180, or something like that, and you see them listed at $120 and $140, and they're not necessarily short sales because maybe they already own their house free
Right.
and clear. So, but as a listing broker, it is your duty to ask a lot of questions. And during a listing appointment, this is a really good tool that you'll find in your form software. And this is the seller estimated net sheet. Because one of the questions that you'll ask during the listing is, you know, do you anticipate your house going into foreclosure? Have foreclosure proceedings begun? And they may say, well, and there is another question on the listing form where you ask them, how much do you owe on your house? And when you start seeing that things are pretty close to the value of what you think the house is going to sell for, then you want to do this, use this net sheet. And I actually have one of my own where I just kind of do different scenarios, like, okay, and I do 2 listing appointments. The first one, we go through and we ask them a lot of questions. And then the second one, I come back with a comparative market analysis, and I predict the price. And a lot of times, the first time you go, that information may not come forward from them. People are embarrassed to talk about their financial situation sometimes. So, but the second time, after you've talked about the value, sometimes you can say your house is worth this range. You can see their face fall. Because they pretty much know how much they owe, and that's when you can start to ask. So what I can do is do several scenarios. Okay, if your house were to sell for this, you would have to pay this and this and this, and see all these items are listed on here for the closing costs. Like for the seller, the attorney fee would be the doc preparation. And then your fee, they're going to have to pay your commission, and you would figure that in. And then, are they going to have to pay any closing costs for the buyer? And and then do they want a home warranty? And then what are their taxes? You'll have to figure their taxes. And you guys learn how to do that during pre-licensing. Because they're prorated. And then the revenue stamps, which are $2 for every 1,000, which are like the sales tax that they have to pay on the house. So you'll go ahead and you'll figure out what their bottom line is going to be. And and like I say, I do several scenarios, and I say, okay, if your house sold for this, this is how much you would, the approximate amount that you would likely net. So this is a real good tool. So if they do say, yes, you know, I still owe way more than what this house is worth, then that's when you need to, as a listing agent, be very careful about advising them whether they should even do a short sale or not. Why can we not advise them if a short sale is in their best interest?
We're not their accountant.
You're not their accountant, or you're not their attorney. So if you're going to list a short sale property, you better know a good accountant. In fact, your company may or may not have a policy on listing short sales, and you need to go and have a discussion with your broker in charge to see if you're even experienced enough to handle a short sale. And if not, then you would be you really should refer them to someone else. But if you decide to go ahead, yes, you should know a good attorney. And there's just some basic questions that you can ask someone who you're considering maybe referring your client to. And here they are. What upfront fees do you charge the seller to do short sales? What is the fee to the seller if the short sale actually closes? Because a number of short sales never even close. And how long have you been doing short sales? And what's the average time for short sale approval? What's your percentage of the closing on the short sale? And do you also handle bankruptcy? Because sometimes you'll you'll list a house as a short sale, and they might stop paying their payments. And boy, if they do that, it could go into bankruptcy very, very quickly. So one thing you want to do when you are listing a house, and say they do talk to an attorney, they do decide that a short sale is in their best interest, you also need to remind them that there are certain tax implications. It may or may not affect your credit. A lot of people think, well, if my house doesn't go into foreclosure, then my credit's going to be okay. So one thing you want to do with the short sale, you want to do a short sale addendum to the exclusive right to sell. And if you don't use this addendum, then whatever attorney they use can draw it up. But as you know, we can't draft forms. So, and on here, you know, it defines a short sale. It also, this is where the seller actually acknowledges to you that any sale of their property may or may not be a short sale. It also has them confirm that they understand that there can be a negative impact on their credit rating, on their credit score, and it also may result in taxable income to the seller. Just because they don't have to pay back the whole loan, they could pay taxes on what comes to them from the sale of that house. Also, it shows that they've already began working with their lien holder. And if you do offer to contact their lien holder for them, there's a chance the lien holder may not even talk to you. You need to have in writing that the seller is giving you, the listing agent, permission to contact their lien holder. And I took a continuing education course. It was an update course with a whole section on short sales, and it was about the year 2010 or 11, I think is when I took this. Yeah, 2011, 2012. And 3 or 4 years prior to that, I had never even heard of the word short sale. But I like to take Bill Gallagher's courses. I don't know if you all ever have heard or taken anything under him, but he is hilarious. But he came up with this, and this is just a sample. You can't use this because it's probably copyrighted, but this gives you some things that you could probably draft as in the form of a letter that will go to the lender, and it's addressed to the lender, and there's a place at the very bottom where your seller signs, and it says, "I hereby give my agent my permission to obtain the above information." And it says that you're asking the lender to please furnish us with the following information. And of course the present principal balance, which a lot of sellers can pull that up online, but you know, they can pull it up based on a certain date, you know, when the payoff would be due. They can help you figure out the interest on that. So this is one form that you could possibly use to get the bank to talk to you, but they may or may not talk to you. In the very bottom of the short sale addendum to the exclusive right to sell listing agreement, it says that the seller authorizes the firm to take the following additional actions. So they do give you permission. You can market the property as a short sale because it is a material fact, or you can even market it as pre-foreclosure. You can disclose or provide information to the lien holder, and once again, there's that permission on this addendum. And it allows you to contact the loss mitigation or other departments with the lender. And also it authorizes you to get the payoff information. So basically, there it is in writing, giving you permission, but also this just takes it a step further, this sample I gave you, because this is what you send the lender. And it shows them, yes, the homeowner has given me permission to contact you.
So sometimes in the MLS it says short sale, but it also says already bank approved amount.
Right.
So does that mean that the amount they're selling, the listing price in the MLS is the price that the bank approved?
Good question.
Because then there's no point in going in lower.
Yeah, there's no guarantee that that price that they put in there is what the bank has approved.
Okay. So,
Yeah.
Okay. Well,
So
that makes sense. You do want to try to get
yeah, you do. You know,
more.
you're working for your client and you want to try to get them the most money as possible. Yes, you.
If the seller has a second mortgage, a home
yes.
equity or something like that, but it's with a different lender, and let's say they could pay off the first mortgage with the sale without any problem at all, but not the second, how does that?
Well, when you have a short sale, you have to have all the lien holders agree. And I tell you, that's what's going to derail your short sale transaction most often is the secondary lenders. And that's one of the first questions on this seller net sheet. There's a place right here, and it asks, you know, do you have any first, second, or even third liens on your... So a home equity, yes. So you need to get an agreement from all the lien holders, and there's no guarantee that they're gonna give permission.
You said that they could end up with taxable income.
Mhm.
I thought if you, to begin with, don't have enough funds to even pay off what you owe, how could you possibly use it for anything else?
Yeah, that's a good question. There could be, I don't know how that would work.
I can tell you how.
You tell me. 'Cause-
Unfortunately, I had to go through this.
Oh, okay.
So whatever price that they agree to sell it for, anything over and above that you actually owe the bank
Uh-huh.
is considered a gift to you, and you have to pay taxes on that.
On that amount, not, because here it says just ask your accountant. And
Yeah.
it doesn't tell you that.
Yeah, that's
Yeah.
the kind of the simple explanation.
So over and above what you have to pay off. I don't know that it's true in every scenario though.
Well, so there was a law passed by the federal government that forgave at a certain period of time, and I think it started in 2007, and I think that it was either 2012 or 2014 where it ended.
Yeah.
But
And
during
this talks
that,
about that.
yeah, and during that period of time, they forgave whatever amount reasonable amounts that you might have had to pay taxes on. So I never had to pay any taxes on what I was so stressed over the whole thing that I didn't even want to look at the paperwork.
I'm sure. Yeah. Did anybody else have a question over here? Okay. So the listing agent's responsibilities to identify a potential short sale situation. First of all, you want to make sure you explain agency, and you want to do that at the first contact that you have with them, because anything that they confide in you doesn't become privileged until you're working for them as their agent. So you want to have that discussion up front about agency.
Well, when you're working for the seller or you're getting a listing, isn't that the requirement anyway that you
That's
have to
exactly
get
right.
upfront? Yeah.
And here, it's more important than ever. And then you tell them that it's your duty to disclose material facts. What if they say, well, we're going to do a short sale, but we really don't want our neighbors to know that we're having these financial problems? You have to tell them that as their agent, you're required to discover and disclose all material facts. And even if they ask you to do something that is illegal or it goes against your licensed law, you have to tell them up front. You have to disclose that. They don't have to put it on the property disclosure statement unless they want to, but you're going to have to put something in an MLS indicating that this is a short sale, and you definitely, if you know an offer is going to come in, you definitely need to advise the buyer's agent of it. There are several programs through the federal government and through specific banks where let me get to that section so I can tell you a little bit better, because they have acronyms, and I want to make sure I give you the exact acronym. I'm not finding it.
Is HARP one of them?
HAFA is one of them. Says,
HAFA.
and that's on page 15 and 16. Here it is. So there's HAMP, and HAMP is Home Affordable Foreclosure Alternative Program. And then there's,
What was
And-
that?
okay.
Affordable.
yeah, I'm saying it backwards. The HAFA, HAFA, is Home even read my writing. Affordable. Modification. Nope. I'm getting that confused. Home affordable refinance. Nope, that would be hard. That's right. I tell you what, I'm gonna give this to you, and you read it out to me because I cannot write and read it at the same time.
Okay.
Now tell me what HAFA is. Home affordable
Foreclosure.
foreclosure.
Foreclosure alternative.
Thank you. All right.
Then, HAMP
Okay.
is home affordable modification.
Okay.
Okay, then HARP is home affordable refinance program.
There.
And then there's another one
Okay.
that's not really a word, it's just initials.
All right.
Oh, wait, okay, so it's not really one such federal initiative was the Making Home Affordable program, which generated HAMP, HARP,
Right.
and HAFA.
Yeah, but not
Okay.
now. So, okay. So, if the property is the principal residence of the borrower, if the mortgage originated prior to January 1st, 2009, and this is important, if the mortgage is owned or guaranteed by Fannie Mae or Freddie Mac, then, and the borrower is delinquent or in default, and the borrower can demonstrate hardship, and the principal amount of the mortgage is less than $729,750, then they may qualify for HAFA. Okay, but they first must be eligible for HAMP, and those are the criteria for HAMP. I said it backwards. I don't mean to confuse you. What happens is you can recommend to your client to contact their lender and see if that loan would be eligible for one of those programs. I think the HAFA, let me make sure I'm not getting you, is what is used for short sales. The others those are types of loan modification programs. But HAFA is part of HAMP, and it provides financial incentives to services and borrowers who utilize a short sale.
Okay.
Okay, and there's pros and cons to it. The big pro for agents is once you've negotiated your commission, they can't go after your commission. Some of these short sales, I have actually had them come back after my commission, and you're really powerless. If you want the house to close, then sometimes you have to give up your commission. But HAFA, they won't do that. So, let's see.
You're saying the banks won't pay a commission on a short sale sometimes?
They will allow a commission, but if there's a bunch of lien holders, you know, and they can't get the lien holder to agree. Sometimes I've even had, as a buyer, I've had them ask me as the buyer, would I pay off such and such a lien? I was representing a guy a couple years ago who went in and bought a house, and that house and the vacant lot next door were real grassy and overgrown. And Durham County has a neighborhood cleanliness policy where they will go in and they'll mow that grass, but they'll file a lien against that owner's title and show that, you know, you owe so much to, you have to reimburse for this cleanup, this lot cleanup. And they try to, you know, do letters and everything, but they, you know, they don't like to file a lien, but they will. So it was a short sale, and we were able to negotiate everything except for that one city lien. And the cities kept saying they were going to remain firm. But then we were able to negotiate. Of course, I didn't do this. I can't negotiate these kind of things between lenders and between lien holders, but the attorney was able to negotiate reduction in those liens. So. There was a couple of scenarios that I wanted to back up with here. All right. There is another form that you want to have if you're the buyer's agent and you're making an offer and you know there's a short sale. You want to do the this addendum. This is the short sale addendum.
And this goes in the offer to purchase?
Yes, it goes with the
I
offer
think
to
you guys
purchase.
already.
Which did you get?
No, we got the short sale addendum to
Exclusive buyer,
right
or
to
right to
sell.
sell. This is for the buyer, this is for the seller. There you go. So, one huge difference is, you don't actually put in a due diligence or settlement date in here until the bank has approved the contract. And it says that the contract shall extend through 5 p.m. on the 15th day following the seller's delivery to the buyer of notice of approval of the short sale. So let's say you were filling out the regular offer to purchase and you came to the section that where you were supposed to fill in the due diligence period and the settlement period. You can write in there, see attached short sale addendum. And then that would defer to this section here where the due diligence date and the settlement date are addressed. So the due diligence date would be 15 days after notice is delivered, and then the settlement date would be 30 days after notice is delivered. Now, what if your buyer and a seller went under contract and didn't use these addendums? Then the seller would be forced to sell. Say, for example, they didn't get approval from the bank and they didn't use the short sale addendum. Then notification wasn't given during the due diligence period that they wanted out, and the buyer still wanted to go through with the transaction, and at the very last minute, let me see if I'm saying this right, that if the lien holder approval was timely obtained but the buyer refused to perform, then the seller would be entitled to receive the earnest money. But if the lien holder declined to approve the contract, then if they didn't have one of these addendums, then the seller would be in breach of the obligation to convey marketable and insurable title, and the buyer would be entitled to not only a refund of the earnest money, but a refund of their due diligence pay. They would be any out-pocket expenses they occurred during the due diligence period, like inspections and that kind of thing. This addendum protects both parties from that kind of thing from happening. Let's see. All right. The another thing that that, the exclusive buyer short sale addendum addresses is, actually, that clause is, on the short sale addendum that you would attach to your offer. Other offers can come in. And, so, this also addresses other offers, so you don't have to, do a backup offer addendum. You just have to do this. In here it just says that the seller represents to the buyer that there is an existing contract on the property, so that lets them know. Let's say, for example, you. Question?
So, and this is something that's just in general, always a question I have. There are questions or there are things on the offer to purchase that the buyer is supposed to fill out to make an offer that really only the seller knows.
Okay.
Like this one, the seller represents to the buyer that there is or not an existing contract.
Right.
So, you.
Yeah, you wouldn't know that, but when they signed it, they would have to disclose it. Hopefully, they've already
Said that
disclosed
in the
in
residential
Yeah.
property.
And most buyers agents will call listing agent and say, "I'm sitting down to write up an offer, and we're going to be bringing you an offer." And if they didn't see it in the MLS,
Right.
or if it's not in the property disclosure statement, then that listing agent would tell them then.
That there's
So then
another
you would
offer
know
on
it.
there.
You would know how to fill this out.
Okay.
Let's see, where was I going with this?
Sorry.
No, I'm glad you're asking these questions because it can be very convoluted. All right. What if you got another offer? What if you're the seller and you're selling your house and you realize it's going to be a short sale situation and you filled out the addendum that was attached to the right to sell, and then you got an offer and you negotiated it and it was under contract, and they would go ahead and they would do all their due diligence just as soon as they found out it was approved by the bank. But then what would happen if another offer came along? Let's say in the case of it was higher and better, you would certainly advise your seller to accept that. But you also have to advise the lien holder that another offer has come in as well. Now, do they have to accept that higher offer? The lien holder might say, "Please accept this higher offer." No, they don't have to because they are under a contractual agreement with this other party.
Right.
Then it just becomes a backup offer. Yeah, and in a situation where a house is a short sale and it's a really good deal, that could happen.
Mm-hmm.
Very likely. Now, must the seller consider that backup offer? No. What if the lender said, "You better consider this backup offer"? It doesn't matter. They don't have to consider the backup offer.
Because they're already under contract, it's assigned.
Right.
Okay.
And also, if it was a better one, they certainly couldn't terminate the first offer. They have no right to terminate that because they're under contract. I think that's everything. It does go into a lot of detail about, that the real estate broker owes the same duty to disclose material facts to the lien holder as the broker would owe to any third party. Even though the seller might be their principal, you do have a duty to disclose things to third parties. So the lien holder would be considered a third party. here's an example of what happened. I was working with a seller and they tried to sell several of they own like 4 or 5 different properties. And it was right when everything just fell. It was in 2008. And they tried to sell and they were having trouble making payments on all these rental properties that they own. And they were trying to sell their principal property and it didn't go through. So then they tried to sell the rental property and it didn't sell. And finally, they came to me and said, what can we do? Can we put this can we take this rental property and sell it as a short sale? Well, first of all, the lien holder would have to approve that. And second of all, if they had other properties that they could sell and pay off that other lien, it's likely that they would never approve that. So, and the other thing was, they're like, well, we have this property up in western North Carolina, and we don't even want to mention that to this lien holder. And I'm like, I don't think we need to be doing business together then, because you have to convey to this lien holder your entire credit history, your credit report,
all your
everything.
All your assets.
Exactly. So we just parted ways after that. And I don't know if they're still holding on to those properties or not. I felt sorry for them. I wanted to help them out. But you have to be careful that, you don't do anything that is against licensed law or state law.
Would that be considered loan fraud?
Good question. Yeah, it would be a form of loan fraud. If you were trying to deceive your lien holder into thinking that that's the only property you owned and you withheld information, yes, that would be a form of loan fraud. So, does anybody have any other questions about short sales? In a nutshell, there's nothing short about a short sale. That's the one thing I always remember. All right, well, it's time to take a break, and we will reconvene in 10 minutes.
Thank you.